to Gaurav, who's here with that list. Gaurav?
Yeah, so first let's talk about Fedbank Financial, where Equiris initiated with long rating and a target price of 160 rupees per share. So they believe that the bank is actually, the company is actually backed by a bank. This is into MSME lending, and this follows phygital business model, which is actually a strong business model which can actually yield a result of AUM growth of almost around 29% on a CAGR basis for the next 3 years. And that is why we are seeing some kind of bullish view coming up from Equiris for Fedbank Financials. Let's also talk about Gulf Oil, because ICICI Securities initiated with buy rating and a target price of 1250 rupees per share. So they believe that any, internal and external factors are basically well in place to fuel the growth from here on. Company's earnings growth is strong, and on the basis of this, we may see the earnings to grow at CAGR of 11.4% over the next 3 years. And if we talk about the company strategy, so basically ICICI Securities is positive on the company's strategy on aggressive branding, distribution rollout, and company is also diversifying its portfolio into batteries and EV fluids. And this is going to help the profitability from here on, according to ICICI Securities. Let's also talk about steel sector, because CLSA has changed some of the target price for the steel sector names. So for example, for JSW Steel, they have downgraded the rating to sell rating and cut the target price to 730 rupees per share. For Tata Steel, they have downgraded to sell rating and also cut the target price to 135 rupees per share. And lastly, for JSPL, they have maintained underperform rating but increased the target price to 820 rupees per share. So what they believe is that profit pool in India's steel companies is going to move more towards miners from the converters, because the steel capacity addition is picking up from here on. And if you look at the valuation for the steel companies, they are actually at a higher end, and consensus is not actually factoring in this valuation according to CLSA, and that is why we are seeing some kind of changes in the target price as well as in the rating for some of the key steel names from CLSA. So let's keep an eye on all these companies from here on.
Well, Gaurav, yes, that's right. We'll be